It's already February, and stocks just notched a positive January, which greatly increases the odds that 2026 will close in the green come December 31st. But not to get too ahead of ourselves, we're going to dig into what typically happens in February and beyond. I'm Blikre, host of Stocks in Translation. First, we need to break down the concept of seasonality, what it is and what it isn't. Quite simply, it is the recurring calendar patterns that we see in market returns year after year or on other time frames. But don't think of it as a definite prediction, just a tendency for prices to repeat historical behavior. Think of it as a way to set up expectations for market headwinds and tailwinds, and not as a timing tool for exact tops and bottoms. You can use it as context with other tools like market technicals and fundamentals, chart reading, etc. It's definitely not a standalone trading system. And with that out of the way, let's get to what happened historically in the S&P 500 since 1990. And a brief note, we could go back farther in history, and we're actually going to do that in a minute with a separate model. Suffice to say, there are lots of ways to slice and dice history, down to which year of the four-year presidential cycle we are in. But here right now, we're just going to be looking back to 1990. And one more note, I'm looking at the median for each month instead of the average return. With averages, extreme highs and lows in individual years, they can skew the results. So you can see here that no month actually skews negative, and that January here is typically up 1.7%. And guess what? It was actually up 1.4%, so not far off. February is typically up less than that, about 0.8%. And another helpful stat to know is the win percentage, or how often it has closed green over the last 2.5 decades. That is 58% for both January and February, and it's not stellar. Actually, I like to see 70% or above because stocks tend to go up most of the time. You're also going to notice in the chart that March, April, and May are usually up over 1%, and I'm circling those now. The win percentages increase over these months so that April and May are both up over 70% of the time. And you can see a big difference over the rest of the summer and early fall months. The typical gains are pretty small, except for July, which is a big standout here, up 1.8%. And we typically end the year bullishly, with October through December up nicely. Now let's look at another way of mapping history. Here we go all the way back to 1928, but we do not use every single year. We only include the years where the day of the week matches the 2026 day of the week. For instance, for the first trading day of February, which is February 2nd, we only look at those years when that falls on a Monday. And for most of the days of the year, we get about 13 years matching over the last near century. And you're going to see in the chart that we tend to trend up into late April, and then we take a bit of a dip into May. Then it's off to the races into the beginning of August, and then another dip into late September here, and then a big rally going into the beginning of December, and then we kind of go sideways to up into year end. And remember that these are just tendencies. And by the way, I have one more chart, and this is of the VIX's seasonality. Now, remember that VIX is the so-called fear gauge. Some people dispute that, but when the VIX goes up, stocks are tending to go down. And so we've had the VIX since 1990, and we can see that volatility starts out the year with an average or median of about 19. And this all goes all the way down to 15 because that's where we are right now. So we are actually lower than throughout most of history. But the volatility does tend to trend up into mid-March. Then it takes a dip over the summer. Then we get a large rise, and we get the largest readings of the year, typically in October and November. That is prime time crash season. And you're going to remember from the other chart that we actually have pretty good returns on the median for those months, but the outliers are pretty big. So we have seen some pretty scary stuff happen in October and November of prior years. And then we have a reduction in volatility going to year end, and that's usually concurrent with that big year end rally that we see into stocks. So all in all, seasonality is a handy guide to give you an idea where we might be headed, but what's actually happening in the market on a day-to-day basis can vary from it, and especially when we have big unexpected news like tariffs. So tune in to the Stocks in Translation podcast for more jargon-busting deep dives. New episodes can be found Tuesdays and Thursdays on Yahoo Finance's website or wherever you find your podcast.